All right, if you own any silver right now, listen up. What just happened is the single worst financial massacre we've seen since 1980. Your investment, it was just obliterated, annihilated in a matter of hours. And you're not going to believe this, it's all because of one man. 33%. Just let that sink in. In a single day, silver was absolutely crushed. This isn't some little correction, folks. No, no. This is a historic, generational crash. The kind of thing they're going to be studying for decades. Billions, with a B, just gone, evaporated.
You know, even the experts, they're completely stunned. One analyst literally called it a slaughterhouse. And the trigger? What set this all off? A completely stunning announcement from President Trump that just sent a wave of panic ripping through global markets. It was an absolute firestorm.
So, over the next few minutes, we are going to break down exactly what just happened, why everyone is panicking, and most importantly, what your options are right now. Seriously, you cannot afford to miss this. Okay, so first things first. Let's try to wrap our heads around the sheer magnitude of this financial carnage. Because this was not a normal market move, not even close. This was an absolutely unprecedented wipeout.
And I really want you to think about this for a second. If you own silver coins or maybe some ETFs or mining stocks, imagine waking up and seeing a third of that investment just gone. This isn't just numbers on a screen, right? This is your savings. This is your retirement, your financial security. For so many people, a huge chunk of their net worth just vanished in the blink of an eye.
Just look at these numbers. They are absolutely breathtaking.
I mean, silver starts the day way up there, trading at historic highs, over $121 an ounce. And then, by the end of the day, it had completely cratered down to around $76. That is the worst single-day percentage drop in the entire history of silver trading. It's even worse than that infamous Hunt Brothers crash back in 1980. Insane. So you're probably asking, how on earth did this happen so fast? Well, the timeline is just shocking. In the morning, everything's fine. The market is calm. Then, bam, the announcement drops. Trump announces he's nominating Kevin Warsh to be the next chairman of the Fed. And within minutes, literally minutes, the floor just fell out. It was an instant, violent, brutal reaction. And this wasn't just about silver. Oh no, the pain spread like wildfire. Gold, the other big safe haven, got dragged down over 11%. And the silver mining stocks? Man, they were absolutely brutalized. We're talking about companies like Pan American Silver and First Majestic Silver just getting crushed, losing huge double-digit percentages in a few hours. The entire precious metals world was just engulfed in flames. So, all of this, it brings us to the man at the center of this meltdown, Kevin Warsh. Who is this guy? And why did the mere mention of his name cause this level of historic panic? Well, Kevin Warsh is a pretty big deal in financial circles. He was a Fed governor during the 2008 financial crisis, actually the youngest one in history. Before that, he was a top executive at Morgan Stanley. But here's the thing. The most important piece of this puzzle, the key to this entire crisis, is that last point right there. He is what's known as a leading monetary hawk. And what exactly is a hawk? Well, to put it simply, a hawk is basically the mortal enemy of anyone invested in precious metals. Think of them as inflation assassins. They're laser-focused on keeping inflation low, and the way they do that is by jacking up interest rates and making the dollar stronger. And those two things, they're like kryptonite for gold and silver, which, don't pay you any interest. You see, for years now, the market has basically been betting on a dovish Fed. That means a Fed that keeps rates super low and the dollar weak. The perfect environment that sent silver to record highs. But Kevin Warsh, he is the exact opposite of that. He means higher rates, a stronger dollar, and an end to all that easy money. So for a market that's been completely addicted to that easy money policy, his nomination was a total shock to the system. Everything had to be repriced in an instant. But here's the thing. As shocking as the Warsh nomination was, it was really just the spark. What turned this spark into a historic inferno was a perfect storm of three factors all hitting at once. Okay, so here are the three triggers. First, you've got the Warsh nomination, signaling this huge change in policy. Second, you get this immediate, aggressive rally in the US dollar, which is just like throwing lead weights on metals prices. And third, and this is where it gets really scary, an automated algorithmic sell-off that just spiraled completely out of control.
Right, because at the exact same time, this report comes out from Reuters talking about a change in government support for metals. Now, the government leader came out and said the report was false, but you know what? It didn't matter. The damage was done. Because the trading algorithms, the bots, they don't wait for confirmation. They're programmed to react to headlines instantly. They saw that negative signal and just started dumping silver in a fraction of a second. This triggered a massive cascade of selling before a single human could even react. And this is why this whole thing is so incredibly important. You have to understand, this crash isn't just some one-day blip on the radar. It is a fundamental reset. It's a massive signal about the future of interest rates, the direction of the dollar, and ultimately, what's going to happen to the value of your savings for the next decade. So, with the market in total chaos after this fundamental reset, the billion-dollar question is, what do you do now? Let's talk about how to navigate through all this carnage. All right. This is probably the most important question on your mind right now. You just witnessed a historic collapse. So, is it time to panic or is it time to pounce? Okay, so from where I see it, you've basically got three potential paths forward. First, you can buy the dip. You could say, hey, this is a panic-driven fire sale and it's a historic opportunity. The second option is to just hold the line, weather the storm and bet that this is a massive overreaction that's going to correct itself. And then there's the third path, sell to safety. You decide the risk of this new hawkish Fed is just too high, and it's time to get out and protect your capital. Now, for all of you who are watching the charts, here's the first critical number you need to know, $70.81. The price seems to have found a temporary floor right around there. And that's a key level. It's right around the 50-day moving average, which is a big short-term trend indicator. So this is basically the first line of defense for the bulls. Everyone's watching to see if silver can hold this line. But the ultimate test, the real line in the sand that everyone is watching, that's the 200-day moving average. It's a huge long-term trend indicator, and it's way down there, near $55. So if the selling continues and silver breaks below that $70 mark we just talked about, 55 is the next massive support level. A break below that, well, that could signal a much, much deeper bear market.
So we're left with the big question. Is this a once-in-a-generation buying opportunity created by pure irrational panic? Or is this a totally rational repricing for a brand new era of Fed policy? I really want to know what you think. Are you buying this historic silver crash, or are you selling to get to safety? Let me know your move in the comments below. This is the biggest story in precious metals in 46 years. You're not going to want to miss what happens next, so make sure you subscribe.